It's hard to breathe, but that's alright. Hush.
Hey, what's going on, guys? Welcome back to a new video. Now I'm going to be going over liquidity and different types of liquidity. I will show you some examples as well on the charts and how we can use it to our advantage. And also, I'm not too sure yet if I'll make a separate video about manipulation, just because I want you guys to understand all sorts of different approaches to manipulation. So, for example, what we can expect after an equal high happens, right? But it might just come under this video anyway. So we'll just go with the flow and see what happens, right? So the first type of liquidity is trend line, right? So traders, when they're often, come into the trading, will the trading, right? We're taught to buy at a trend line, sell at a trend line, right? And wait for the break, or wait for a breakout of that trend line to go long or short, and vice versa, right? And pretty much all this is doing is creating a lot of liquidity at these areas, and the market will manipulate those trend lines and stuff like that in order to grab liquidity before the large move occurs, right? So pretty much often what you'll see is price ranging between the channel, moving to the upside, and all it's doing is collecting liquidity. They're not collecting liquidity, but generating liquidity, right? Creating liquidity. So often what will happen is it'll eventually break out, take out the lows, right? And a lot of people could say, for example, this is the hourly time frame, but the overall structure of the market is moving, whatever. A lot of people would think this is, a break structure. Now we're now in bearish market. But say, for example, if you trust the high time frame, the daily time frame, the overall market's moving up. This is a 1 hour complex pullback, right? Let's say all it is just liquidity, right? Then often what price will do is it'll take out all the structural lows. A lot of people would think we're in a bearish market, then they'll start to go short, right, at these levels, because they think, okay, we've broken below these lows, let's go short. But actually what happens is it's just tapping into an order block in which we understand, taking out the lows and continuing in the desired direction. Secondly, we have the support and resistance, so it's pretty much just ranging. So pretty much what it's doing here is, in my opinion, it can always be classed as a ranges. People just see this and be like, oh, it's trading support and resistance, but it's just a sideways correction, right? It's just a range, but it is bouncing off a floor and bouncing off a wall, so resistance and support, okay. But again, traders are taught to buy at support and sell at resistance, and this generates large amounts of liquidity above and below these areas in the market, right? Unlike us as just traders in the market, we can just buy or sell at any time or any price we want to because of the size of our positions. But this is not the case for the large banks and institutions, who have a lot of money. They need a reason to just buy or sell, so they can't take positions anywhere they want. They need to buy from someone who's selling, right, or sell to someone who is buying. So if you're going into a store and looking to buy, a certain something, right, but no one is selling anything, then you ain't going to buy anything, right? And the same concepts apply to trading. If so many of these traders are buying at support, then that means that the large banks can't also buy. And this is why we see these areas, in the market being manipulated, which gives the market fuel to move. And the third and final type as well of liquidity is equal highs and equal lows, otherwise known as a double top or double bottom, right, by the retail institute, retail wood trading. But people often taught, to sell from a double top, buy a double bottom, and which of course generates liquidity above and below these areas. And as we know, the markets need to target liquidity in order for the markets to move, and this is the exact reason why we know these patterns as equal highs or lows, because we know how these areas get manipulated a lot. So we, pretty much expect price to come into these price levels and take the liquidity. So often what you'll see is if we just go up here, right, if price creates something like this, right, and it taps into this equal high, that's really not a good drawing at all. Let me try that again, guys. So if price comes up, creates a swing point, comes up, and rejects off, right? Often what you will see, like I said, I'm not saying it doesn't work, but obviously in my opinion it doesn't. But it doesn't work, don't get me wrong, it doesn't, right? So no matter what anyone says, if they say, why do you see double tops and why do you sell double tops when it's just liquidity? And at the end of the day, mate, you got to do what you got to do, Don't let anyone tell you different, right? If it works for you, it works for you. That's all that matters, okay? People are entitled to their opinions, but, just stay in your own lane, you do you, But to us, again, it's liquidity. We've got a swing point created, got a low here. prices, obviously created a double top and started to see a short-term reaction. What we will often see is price will, yes, don't get me wrong, short-term reaction and then continue in the desired direction, right? And all this is doing is tapping into an order block in which we could look to buy from if the overall market structure was bullish. So again, a lot of people do this and that's absolutely fine. It just depends, it's up to you. So what works for you best, but to us we just see it as liquidity. So every sort of equal low we see, even if it's a triple bottom or a triple top, right, if there's a third touch like people say, triple bottoms, triple tops, that is still liquidity, right? Trend line as well, we're going back to that. So often again, when price is respected in a certain trend line area, we can expect the manipulation to happen, so price will just wick below and take out liquidity before continuing to desired direction. And then a range, again, when price is trading from support and resistance, also known as a sideways correction, we should see some manipulation, and usually it's something like this. So if I just pull this back, right, and this is often what you will see, is price will come up, wick above, right, tap into an order block, and then continue in the desired direction. So the people who were buying on a breakout would have been stopped out, but as smart money know that there's an order block set up there, and we could look to sell if the overall market structure was bearish. Okay, so price is ranging, took out the highs, just took out the liquidity, tagged into an order block. Institutions are pumping orders, the last step of the orders into the market. Then price continues in the desired direction. So a lot of people who would get caught out here, or the breakout buyers, and even the sellers, trading at this support, they'd sell here and then they'll switch to a buy bias when they get stopped out. They'd buy from here, break and retest and buy, but then that obviously didn't happen. We continued lower, and what we're here is just a liquidity sweep, but it's also tapping into an order block. Okay, so if we just look at the quick example here on the chart, we can see here that this is an equal low. Now an equal low in this example is literally spot on, right? This is a literally spot on equal low. They don't always see like this. Often what you will see is price come down just a little bit more, and that is still classed as an equal low as long as it's still within a certain sort of area region, right? Because it could be classed as a zone. But as you can see in this example, this is a nice equal low. Price tapped into it, and look what happens. Again, short-term reaction, tapped into an order block here, right? And price sold off, and then continued in the desired direction. And that there, my friends, is manipulation. Okay, but would we have bought from there? No. Would we have sold from here? Potentially, yeah, right? Because there's an order block sat there. Okay, and a broken structure if you were to go into use breaker structure type, as we've spoken about, number 1. But again, it's just one of them, again, if you wanted to buy from there for the short-term reaction, you can do so, it's fine. If it works for you, it works for you. Okay, but again, short-term reaction, desired move, this is a false move. All it's doing is taking liquidity below these lows, and probably filling imbalance along the way. So if we look here, it's probably imbalances somewhere, right? There's an imbalance there, imbalance here, which has been partially collected, imbalances. So it's just tapping into the imbalances and clearing liquidity before continuing to the desired direction. Okay, again, you already know what imbalances is at this point. Also, another thing to note as well, liquidity is imbalances. All liquidity is, if you don't know what liquidity is, I forgot to mention that at the beginning of the video, but all liquidity is just money. So people who are trading, classic support and resistance, right? So they're buying, they're selling, they're gonna get stopped down with the banks. Know there's liquidity in these ranges, right? And get ready for manipulation. It's about to happen. Pretty much is the story, right? And people trade bottoms, bottom lows, equal highs. People trade trend line touches. So when you see someone on social media, for example, if you're looking for a sell here, right? If I'm looking for a sell here, and then I go on Instagram and I see like a couple of people who are looking to also sell from here, who don't really understand smart money concepts, they're just trading double tops, then I wouldn't take that position. Okay, so you got to factor in everything when it comes to trading. Just think of everything, right? So you've covered that. I mean, we can go ahead and just flip it. Okay, so we can go ahead and just flip it for an equal high. Again, that's all you will see: short-term reaction, liquidity sweep, right? Collecting liquidity, desired move. Okay, trend line. So as you can see, if we just draw this trend line down here, although it's not a perfect trend line, could still qualify as one, I suppose. You got the 1 touch, you got the 2 touch. What are you going to look for, right? A lot of people are going to be looking to sell from here. That's a buy. A lot of people are going to looking to sell from here, right? The stops are going to be above the previous high. So there's going to be a lot of sellers in this market. So would we trade this? No. And we've spoken about this one in quite a lot of our videos, because this is a trade that would have been invalid if it wasn't for the momentum confluence, right? The momentum wasn't there. It was in the premium zone. It was a decent trade, right? But would we have sold from here? No, because it's lining up with a trend line. We don't trade trend lines, right? So what we're going to do is, this is going to be invalid points of interest, and we're going to look to target up to these highs. Once price taps into one of them, that's when we're going to sell, So just think outside the box and just understand that, trend line, stuff like that, it's up to you. But in my opinion, it's not really worth it to trade. If you learn smart money, you must understand that this is just all liquidity. So what I'm saying is, don't forget that you obviously were once a retail trader. Just remember the things that you learn in terms of basics, support, resistance, trend lines. Make sure you learn all of that. That's why when we have our free, beginner course online, I teach everyone about support and resistance. Even though I don't trade it or anything like that, I teach everyone it, because it's important that they understand the logistics and basics. So when they come to trade smart money concepts, they understand the basic mindset. Okay, so the retail trader who trades normal break and retest or support and resistance or whatever, right? But most of you who come onto this course, you would have probably already traded whatever you trade, whether it's break and retest, EMA crossover, whatever you traded previously. Think back to that and think of that as just pure noise and liquidity, because obviously, a lot of you people will come here and find that you were trading support and resistance, but it doesn't work. And now you've watched me say that support and resistance is I agree with you, right? It doesn't work, but it does, obviously, in terms of how you use it. But we know when price is trading between the support and resistance level, now that you've learned, it's just liquidity. So that's probably real. You probably realize a lot of things for it. So again, trend lines equal lows and highs. Just ranges in general. So if price, for example, this range here, right? It's all just liquidity, because what it's doing is going up and down, right, between a certain channel. So a trend line, okay. And price, what we'll do is come down and taking out these highs, right? And you'll see this happen from time to time to time. And yeah, that's pretty much it, really. You got a range here as well. There's the liquidity above, but there's more equal lows. Price came down, took it out, tapped into this order block here, and continued inside move. Price came back up. Got this sort of lows here now, broken below, came back 50% of the candle, sold off, broken structure, so we're now in bearish market. Pulled back up, mitigated something on a smaller time frame, most likely, so an order block, and sold off. Okay, so again, just understand everything about markets and just understand liquidity is literally almost everywhere. So when you're looking for a trade, start drawing on your trend lines, start drawing on looking for equal lows and equal highs, and just see if there's anything around. Okay, so as always, guys, thank you so much for watching, and I don't think there will be another video to this section. I think I was humming and hawing whether to put this under a different section of the course, pretty much. So whatever section this course, liquidity is in, it'll probably be in the confidences, maybe, or supply and demand. I'm not too sure yet. It'll be in one of the whatevers, right? So whatever it's in. Thank you for watching. Okay, guys. So any questions about this, make sure you ask me. But just understand that there's so many different types of liquidity. It could mean, if I just draw a quick example as well. All right, and this is often what you'll see. So you'll have the trend line down here, all right? Manipulation to the upside, broken above, come back into the range, and then sold off and bought off, right? So big long shift in momentum, and this here is liquidity. Eventually price will come back down and take out that, switch to a bear structure, looking to mitigate a new point of interest and sell. Right, and this is just what happened. It's like when you understand imbalances, it's sort of like understanding liquidity, because imbalances, it's just the same concept as liquidity. So when price has an imbalance in price, it will come back and rebalance itself, then it'll be fair value in pricing. But yeah, I'm going to end the video here, guys. Really, honestly, there's not much to it. Just understand liquidity, I guess, and there's so many different types of liquidity. So what you can do is, this will all be in the Discord anyways, so you can just go ahead and look at it whenever you want. But just go on the charts and just look at, start mapping out the equal highs, start mapping out structural lows, and just seeing what happens, when it comes to it. So it breaks below, comes back in, right? Just see what happens, because this, obviously, a lot of people would be buying from here because they think this is a double bottom, but in reality, price violates it through and then continues in the desired direction. So that doesn't work. Okay, so just go ahead and just mark them all up and just see what happens after the move. Okay, yeah, as always guys, thank you for watching, and au revoir.